Let's go welcome Pete McGuire from XM, who's standing by via Skype. Pete, welcome to the program, and thank you for joining us here so late in the throng of it for the year. The famous 5-day rule. You've written a special report that was released earlier on today. For those who are not aware of what it means, give us some insight.
Well, good morning, David, and good morning to all the viewers. I'll tell you what, as we look in the year in the vision mirror, we've got to worry about, and we put that one behind us in 22, we move into 23, and we look at the first 5 trading days of 2023 to give us an indication how the year's going to map out. And there's been some quite extensive analysis on this for 30 or more years to look at different commodities, look at currencies, look at stock indexes and their performance over that period and determine whether we're going to have a negative year or a positive year, David. So that's a quick synopsis of what the discussion is about.
Okay, so the first 5 days of the year, more often than not, are very influential of what broadly happens over the course of the remainder of it. So 360 plus that 5 at the beginning. So let's go through some of the individual charts that you can go and look at this point in time and the track record to go get a sense as to what we're looking at. I know that you like to keep a close eye on what's going on in gold. Can we kick off with that one?
Yep. Well, I mean, when you're thinking where it is at the moment and you're worrying about geopolitical, you're certainly worrying about supply with central banks globally gobbling up gold, or I should say countries gobbling up gold. And the demand picture is certainly increasing. We're sitting at $1,800 an ounce. It's had a big rally to the upside, given back a little bit of those gains. But the overall mood and momentum, David, with US dollar coming off the way it has, will be a continuation to a lot of viewers that gold story is going to increase as far as demand and price, and it'll take its little brother silver with it for a nice ride. So keep an eye on that in 23, because I think there could be some wonderful opportunities in that particular market.
US stocks, there is so much conjecture as to what lies ahead. People think that we've seen the lows. People are talking about potentially we're going to see fresh lows. A lot of strategists and so pretty influential people as well on Wall Street talking about the likelihood that we're going to see SPX go and hit 3,000 or somewhere around that kind of level next year. From a technical perspective and this 5-day rule that you talk about, can you go and combine them together and see what it may go and play out next year?
Well, the S&P would be sitting probably close to 14% or 14% plus negative for the year to date, and we've got a few more sessions today naturally, and then next week. So where it wraps up, David, if it's relatively, well, it's a fairly heavy wipeout, and when you're looking at the Nasdaq, you're over 30%. So there's the first point. Second point is, does that momentum continue for next year with yields, bonds, talking about the currencies, supply chains, and all the impact as far as inflation wrapping around that? Do we see a continuation? And what the bad news story is that when you have a year like this with a wipeout, traditionally your second year is worse than the first year. So that's where many analysts are saying, is 3,000 the new benchmark for the S&P to be tested over the 2023 calendar year, or even lower? So it's hard to go out there on a limb and say yes, but I think a lot of traders are certainly looking for a bearish year, not a bullish year. And how deep that route's going to be, well, stay tuned to ausbiz.
All right, indeed. Tesla's doing its part to go and see the index go fall back to 3,000. It's had a horrific time of it over the course of the second half of this year. What do you make about the price action we're seeing at the moment, and including a lot of the commentary, of course, about Elon Musk spreading his wares pretty thin across these multiple roles he's got as chief executive of 3 major companies?
Yeah, the first, I'll answer the second one first, and that is, like any chief executive, you'd have wonderful teams underneath you, so and strong teams, and he's regarded as a fairly hard taskmaster, so I would assume that his executive teams would be really across all points of the business model. So there's the first part, and he's probably taken his foot off the gas a little bit with Twitter. As far as the sell-off, yeah, there's no doubting that. You've seen a big correction to the downside really since, May, looking on that chart, April, May, it gave up all of those gains, and it's really capitulated from a price perspective. Demand, well, that's another story that one needs to consider from a global demand, and maybe the price was totally cooked and it's giving up all of that hot air. If you're looking at the first part, possibly, David, you might see some form of stability in price, but it's too difficult to really analyse and come up with a definitive trade strategy because there's a lot of moving parts that go into the Tesla story.
Absolutely. Well, pretty clear over the last few years, every time that Elon sells, it generally goes and coincides with a leg lower. So interesting that he's just only relatively sold some more shares. And of course, we're seeing what's happening in the aftermath of that. Let's stick with the US mega cap space. Amazon is a stock that was one of those ones that really fell quite hard earlier on this year. Trading update that came through for earnings and certainly went and missed the mark. It's trying to go and slash a lot of costs at this point in time. When you look at it as a prospect next year, how does it stack up?
Well, I believe they're going to trim about 10,000 of their workforce, David. So there's the first part of it. So it's going to be very, very, from a cost perspective, they're naturally their CFO and their strategy people are all working on that together as far as how to trim costs. I'm interested to see how their earnings are going to be over this Christmas period. And we'll get probably a good picture of that come sometime in January, whether we see a bounce to the upside or the consumer is taking a holiday. And that really impacts all retail globally. So there's the first part. The second part is moving forward, do these stocks continue to plummet? And the story, I suppose, is that one's got to be conscious of where they've been, and maybe they were very heavily overpriced. And now's the time to be short of those particular monsters and what impact that's going to run across the NASDAQ to pull that one back another maybe 20%.
Hey, let's go and change tack and go to the commodity complex again. We talked about what's going on with gold. I want to get your view about WTI because I was feeling quite bullish about the energy complex for quite a while, but then all of a sudden we've had this China reopening story, which would normally be pretty bullish, but we've seen WTI under pressure. What's some of the factors behind that? And technically looking, how does it stack up moving forward?
Well, David, first off, we're at $78.30 a barrel for West Texas Intermediate. So it's had a very strong move to the upside from that 70 handle or 71 on the 10th of December, probably giving up a little bit of that hot air, but it's had a really strong move to the upside. Traders rubbing their hands with glee. It's been a very bullish move over that last 10 trading sessions. So yes, it's giving up a little bit. Wouldn't be surprised to probably take a little bit of that hot air out of it, but I'm worried about, as you mentioned earlier in the break, as far as storms entering, or Nadine did, storms entering the Caribbean and what impact that's going to have naturally to the US. So it could be quite catastrophic from a supply side and the production. So that could very much create a US production. And these are the times of year that you can see big spikes as far as natural gas and crude. So I take on board what you mentioned about China. I'm conscious as far as those, the country opening up and demand will increase naturally. So we could be in for a move quite aggressive to the upside as far as energy over the next month or two. And that's not going to bode well for inflation stories and the overall themes from central bankers. So don't take your hand off the wheel, David. There's plenty of excitement for traders over the next month.
Absolutely. Pete, I'll have to go and wrap it up there, but thanks so much for joining us on the program, not only today, but over the course of 2022. Have a Merry Christmas and Happy New Year. Look forward to going and speaking again in 2023.
Thank you, David. You guys are the best.